going? Before we get into this video, NQ Stats does not provide strategy. It does not provide indicators, and it does not provide investment or financial advice. What NQ Stats does do is provide statistical edge derived from historical market performance. Nothing shown in this video should be taken as advice of any kind. This video is providing a tool that could potentially be leveraged to make a trade decision. You as the trader are responsible for how you leverage and build around it, in addition to how you enter, exit, and manage any trade you decide to take. With that said, let's get into it. Alright, hey, how's it going? This video is going to be a quick video on just data norms, means, medians, distributions, average ranges, putting it all together, how I view it, and how I think it could help some of you. This is going to be specific to hourly data. You could do this for H4 data, 15-minute bar data, daily bar data, weekly bar data, monthly bar data, doesn't matter. The time span doesn't matter. You can everything you're going to see here is applicable to all durations of time. But for this example, we're going to be using hourly data. So we're going to start this off. What you see, let's do this. Let's hit play and start the next hour. This is the 20th, so this was yesterday, going into the 3 p.m. hour. Let's start this bar. I want to get the first minute of the bar out of the way, so this on bar update, on bar close, need the bar to close, first bar, to give me a updated indicator values. Okay, there we go, pause the video. Alright, let's walk through what's on this chart currently. In the top left of the chart, you'll see some numbers and stuff, and then we'll explain what that is. Not that I don't share these indicators I built for myself, but it's data, and I want to explain the data. You can, by all means, create your own indicators. This is a 30-day look back just for this chart, for this purpose of this video. Typically I'll use a 90-day look back for averages, looking at the means and medians. I'll use 10 years of data to get a nice broad multi-market scenario encompassing data set when I'm looking at standard deviations or variance from the mean. So with means and medians, I want to be more in tune to recent price action. With standard deviations or variance from the mean, I want to have a broad market behavior, spectrum of data. So anyways, over the last 30 days, there's been 21 trading days total. That's what that 2-1 total is saying. Out of those 21 days, there's been 11 up hours and 10 down hours specific to the 3 p.m. hour. Now, it takes those 11 ups and 10 downs and generates means and medians of the wicks of the highs and lows. So from a 3 p.m. up bar, right, an open, low, high, close, there's your mean medians of the lows and your mean medians of the highs, and then vice versa. From an open, high, low, close, you've got your mean medians of the highs of a down hour and the lows of a down hour. Next is the horizontal 0.5 increment lines, and those are your net change standard deviations for the 3 p.m. hour over the last 10 years. What that is telling me is statistically where the hour will close or has closed to a specific probability, right? So I have a whole video on this, net change, standard deviations. Check out NQ Stats. You can see the video on this. I'm not going to go too in depth into this, but what I anticipate for a normal distribution for this to be like a normal non-outlier crazy hour, just to be a normal hour, so I'm anticipating the close to be in here, plus or minus 1.0, somewhere in there. That's 68% of the time. That's what happens. Now when you're looking at a directional up move, like let's say price is trending up, it does it open, low, high, close. An open, high, low, close. What I'm expecting price to do is if it breaches and trades above the 1.0, I'm expecting it to come back below the 1.0, whether that's back above or back below, depending on if price is going up or down. Because as the range, right, as the range between the 1.0 plus 1.0 and negative 1.0 is 68%, 84% of all values have closed below the plus 1.0. So 84% of the 3 p.m. hours have closed below this this area, and vice versa. When we're talking about specific to the down close hours, 84% have closed above, to infinity from the negative 1.0. But anyways, let's look at this bar building out. Oh, one last thing. The average range. So this is the current range of the bar, right? You can see we first minute of the bar trended down. We've got this range here. It represents, top left of the screen, 16% of the average. So over the last 21 trading days, this is 16% of that average. So there's a lot more room left in this bar for this bar to move. Now, the gray is the upper portion of that remaining 84%, and the lower gray is the lower portion that remains of that 84%. So it could go 84% up this way, or 84% up that way, or down that way. As this trends and chops, you're going to start seeing this condense, and it's just showing how there's less range left. But I'm not sure what this hour is going to do. We're going to hit play. I'm going to walk you through what I am seeing, what I would like to happen next, where I think price should go, just based off of market norms, right? This data on the chart. So we're going to go ahead and hit play. Play. I'm going to speed this up to 10. And so let's see, has this met halfway yet? Right, so I'm going to pause it right there. As price is coming down or up, this has met halfway to the negative 0.5. I'm anticipating this to at least touch the negative 0.5 since it's gone halfway. I don't have data on that. I just know that that happens more times than not. Now, if it gets down into there, I would like to see a sharp pivot off of the 0.5. If price trends down and blows through the 0.5 and closes through it like it doesn't exist, we're likely going to go to the negative 1.0. If we get a trade down and hard pivot, like with a wick, and pivot back up, some type of inside bar or hammer bar, we're likely going to see back to the mean, the open. Let's play this through. And if that pivots, right, if we get down into there and it pivots, that is the average low of a up 3 p.m. hour. And so let's see what happens here. If we can get back above the second down bar. Open of that second down bar. Let's see if we can get back above that. Might confirm a trend change here. All right, there you go. So pause. What I'm anticipating to see is a hard, we pivoted hard off the 0.5. That's a key pivot point. You'll typically see hard pivots from the upside or the downside off the 0.5s. This was an average low of a up 3 p.m. hour, and we've started to confirm a reversal back to the mean. I am at this point anticipating the open to get hit. Now, if it closes above the open, if we can get a closure above the open, I'm expecting price to see the other 0.5. What it does there, we'll look once it gets there. But also what that will do is, price can do one of two things here, right? It can come up, it can wick and pivot back and go back down, or it will close above and continue to go higher to the next 0.5. Once it gets up into this range, it's now into the mean median of the average or the up bar, right? So when you think about the 3 p.m. hour building, open, low, high, close, if it's going to go from open, low, high, and then close, I want to see price stay below the 1.0 or go above, right? Go above the 1.0 and come back down below. But either way, I want to see this hour close below the 1.0. That's my expectation. That would be considered the norm. And getting in, now that we've hit the mean median low of an up hour, getting into this upper green box would put this into a pretty normal average 3 p.m. hour. So it's a lot said. Let's hit play and see what we got here. It's on 10x playback. What I'm anticipating to see is this go back to the mean, at least. So back to the hourly open. And we'll see if we can get a closure above it. Let's fast forward this a little bit. I might not need to, I think. Let's see here. Pretty close. All right, is that bar going to close? All right, pause. That bar has now closed, 1 minute closure, set a new high. It closed above the high. All right, so if we zoom this in, here's the high of the old high of the hour, and we've broken above the mean, above the open, and we've closed back above. This is confirmed that we are set a new high, and I am anticipating now from this point on to see price go from open low at a minimum high, and then maybe a close. But at a minimum, see the plus 0.5. And that's because of where this low has formed, the confirmation back above the high, the open, with a closure. And this is, I'm anticipating this to be a normal hour, right? So just to be I just want it to be an average hour, right? Open, open, low, into the green, high, close. We're going to play this out. I'm going to fast forward it just to see where we go here. Let's get this on 20x. You know, there's some key pivotal internal highs. Let's see how price reacts to these highs just for curiosity. Let's go. Let's do like a 50x. All right, so wicks that high. It gets into the average low or average high of a down hour. Starts to form some hesitation. Maybe it's, you know, okay, hey, let's do something like this and go down. But I'm not anticipating that based off of the already manipulation and closure back above. I'm anticipating price to come up to this 0.5. Let's fast forward this. Go to a 20x. Wicks the high, trades back below. Let's keep going. We'll blow these lines out now that they're obsolete. And there's your 0.5, right? So my pause the playback. Wicks the 0.5, breaks above, comes back and looks like it's trying to close back below the 0.5. So at this point, I want to see some confirmation. If this is going to be a confirmation, we have a inversion here, right? So I would look for a confirmation inversion gap to be closed back through, potentially take a short back to the mean. So enter on short, back to the mean, back to the hourly open. You could have, well, like you could have already took the long off the low, but let's say you took the long back to the mean, or maybe you ran it all the way up to the mean, median, high, and now you're looking to take a short off of this area to, you know, close out your doji hour, or just to hit the closure of that hour. But we're going to let this play out. If we get a closure back below here, that's a good sign to short back to the open. If we don't get a closure and price continues to chop around and support on this 0.5, it's potential that we might push into the hour. But either way, want to see it stay below the +1. So we're going to hit play. And we don't necessarily need that on the chart right now. All right, let's hit some faster playback here. We'll go 50x just to get this moving. All right, it's chopping around the 0.5. So going into near the end of the hour, chopping around the 0.5, I'm not expecting this to be a reversion, right? So if you think about how a bar builds, you know, 4 segments of a bar, right? The first segment of the bar, of any bar, an hourly bar, a 5-minute bar, a 1-minute bar, that first quarter of the bar will typically set the high or the low. Usually, like I did stats on some time frames. Most of them are around 65, 70, 75% of that higher that low of that bar will form in that first quarter. Um, as far as into the end of the bar, your third and your fourth quarter is going to set the opposite. So if this is the low, third or fourth quarter will be the high. And that makes sense. It's not rocket science or anything when you think about like an open, low, high, close, right? You should set that low somewhere in the beginning of the bar and the high somewhere in the last part of the bar. But now that we've broke this first quarter, it's likely this low is in. We're probably not going to come back and set a new low. That'd be a pretty big dump. So what I want to see is this bar continue to play out, stay below the 1.0, or invert this gap, right? We're either inverting this gap as a 0.5 pivot to take a short, having already realized the long move, or this is going to just close below the 0.1 or the 1.0 somewhere in this green range. So we're going to hit play here, still on. Let's move this up to like 50% playback. And it tried to invert that. Oh, a couple times tried to invert, failed, and just bounced off. All right, so this is probably going to go up to the 1.0 based off of that momentum. And I'm not anticipating this to close above the 1.0. So let's see what that does. Oh, I think we're just a little too quick there. Let's bring that back a couple seconds. All right, so play this through again. All right, there it is. And there's the close. We closed just at it, directly at it. I think like 1 second more. There's the close, 4 p.m. Close right at the 1.0. All right, a lot has happened in here. So when you look at this picture, overall picture, you have this 3 p.m. hour without even looking at this data, right? You have the open, and then you have the open, open, low, high, close, right? That is the bar that has built an open, low, high, close bar. We've manipulated out of the mean median of the low, where the low should be. And we've gone up into where the high should be from a mean median perspective, right? And now we're closing below the 1.0, which should be the anticipation based off of historical data. This 3 p.m. hour is a normal 3 p.m. hour. It's not an outlier hour. This is the norm. This should be the expectation. This could have very well been inverted and done the same thing to the downside. You could have opened up, came up into the 1 point or the 0.5, through the mean median, come back down, and then did something like that. Could have very well have done that as well. And that would have still been an average 3 p.m. hour, the expectation. So that is the data I look at and I form trades around. I look at it from an hourly perspective. This is hourly data, so an hourly perspective. I also look at 4-hour data and daily data, all three at the same time, to kind of gauge where price is reverting. Are all three aligned, reverting from the lows, or is like one reverting from a high, one reverting from a low, and is one at the mean, right? I want to see kind of all three in alignment to point to a single direction, and that helps me with generating a bias. All of these tools are custom coded. They don't exist in NinjaTrader. There's probably others, I think, out there that might have replicated some of my content and made tools for TradingView. If you're a TradingView user, just search X NQ Stats. I think there's a couple people that have made them. If you're watching this video, drop something in the comments if you know of anybody who's created indicators based off of this stuff. But just want to go through that content real quick. Less than 20 minutes on this video to just discuss stuff I look at, expectations of a bar as it's building, an hourly bar is building. This is applicable again to H4, just as this says H1 open. I could very well easily say H4 open, daily open, it's the same. If I was looking at an H4 data, instead of a 1-minute chart, I'd probably use a 5-minute chart. If looking at daily bar data, I would use a 15-minute chart, just because it's a lot larger data set. But anyways, hopefully this video was helpful. If you have any questions, feel free to drop something in the comments or reply on X, and have a good day.